Welcome to the deep dive. I was thinking about companies making big strategic shifts and how some really managed to pull it off.
That's always fascinating to watch.
Yeah, and today we're diving into Novartis's 2024 performance. Looks like they're a case in point, seeing some strong double-digit growth after becoming a more focused medicines company.
That's right. The numbers are quite striking, especially the sales and net profit growth. It really seems to validate their strategic direction.
Absolutely. And our source for this is their own 2024 annual report. So pretty comprehensive stuff.
Definitely. Gives us a lot to unpack.
So the mission today is to, really get under the hood, understand their business segments, the financials, obviously, and their strategy for growth, and, well, shareholder value. Where should we start?
I think the best starting point is that big strategic transformation they went through over the last, say, decade.
Becoming that pure-play medicines company.
Exactly. It wasn't overnight. They made some really significant moves to divest businesses that weren't core to that vision.
Like what sort of things?
Well, big ones, actually. Their animal health division, their vaccines business, even the generics arm Sandoz, which we'll probably touch on later.
Right. So shedding those activities must have, well, freed up quite a bit.
A huge amount of resources, yeah. Both cash and, just as importantly, management focus. And that focus shifted quite deliberately
Good words.
towards these really fast-growing, innovative areas in medicine. We're talking cutting-edge platforms,
That's right.
things like xRNA therapeutics, using RNA to target diseases very precisely. Then there's radioligand therapy, or RLT.
Okay, what's that involve?
It uses targeted radioactive drugs mainly for cancer to kit specific cells, and of course, gene and cell therapy, trying to fix diseases at the genetic level or using engineered cells.
Wow, okay, so really betting on the next wave of treatments.
Definitely feels like it. These are potentially revolutionary fields.
Now, the report also talks about something maybe less flashy, but vital, strengthening their global production and distribution. Supply chain resilience.
Absolutely critical. You can have the best drug, but if you can't make it reliably and get it to patients, especially with all the geopolitical and economic volatility we see, it's a huge problem.
So building a robust global network is key.
And managing their technical and data infrastructure, their partner networks, they mentioned building an agile footprint.
Meaning they can adapt quickly.
That's the idea. Adapt to changes in demand, regulation, whatever the world throws at them. Future-proofing, essentially.
Makes sense. And ESG, environmental, social governance, that's still high priority.
Seems so. The report mentions a deepening commitment, things like improving access to medicines, which is huge for a pharma company.
Yeah, that's always a complex issue.
And fighting climate change, strengthening ethics frameworks, they seem to be taking it seriously.
Is there external validation for that?
They point to high rankings from independent agencies, and interestingly, they were ranked #1 in the 2024 Access to Medicine Index.
That's quite something. It shows a real focus beyond just the bottom line.
It does. Which leads naturally into another area they highlight: fostering innovation through their people.
The human element can't innovate without the right talent, right?
Exactly. Recruiting, retaining, developing top scientists and professionals globally. They talk about simplifying their structure, targeted hiring, investing in new facilities.
Creating the right environment for breakthroughs.
That's the goal, making the organization fit for future healthcare challenges.
Okay, so that sets the stage. The report then outlines 3 main strategic priorities. How do these fit in?
They're basically the pillars holding up this focused strategy. First one, deliver high-value medicines to accelerate growth.
Which means getting those innovative drugs out there, but also boosting existing ones.
Precisely. They mention strong momentum in several key drugs: Entresto for heart failure, Cosentyx in immunology.
Kisqali too, right? That one's been growing fast.
Absolutely. Kisqali for breast cancer, Kesimpta for MS, Scemblix for leukemia, Pluvicto for prostate cancer, and Leqvio for cholesterol. Big growth drivers.
And they're counting on new launches as well.
Yeah, it's that dual approach. Maximize the current blockbusters while ensuring the pipeline delivers the next generation. That's how you get sustained growth.
Makes sense. What's the second priority?
It's about their R&D strategy, taking an end-to-end approach,
Meeting.
looking at the whole life cycle from initial research through development, clinical trials, all the way to commercialization, focusing on priority programs, managing the life cycle of existing drugs.
And they're open to outside help.
Very much so. Collaborations with academic researchers, partnerships with biotech companies, they know good ideas can come from anywhere.
Okay, and the third priority.
That ties back to what we discussed earlier, strengthening that operational foundation. Supply chain, manufacturing, infrastructure, making sure the engine runs smoothly.
Got it. Now, like any annual report, it includes forward-looking statements. It comes with caveats, right?
Always. Important to remember that projections about new products, financial performance, even share buybacks, they all carry inherent risks and uncertainties. Lots of things can impact the actual outcome.
And the report details some of those risks.
Oh, yes. It's quite comprehensive. A big one is always cost containment pressure.
From governments and payers trying to control healthcare spending.
Exactly. Price reductions, limiting access, pushing for generics or imports. It directly impacts revenue.
A constant battle in this industry. What else?
Competition, obviously, it's fierce. And the sheer pace of technological change. Falling behind, especially with things like AI and drug discovery, could be really detrimental.
It has to stay ahead of the curve.
Definitely. Then there are the inherent challenges in, well, the core business. Clinical testing, navigating the complex regulatory approval processes with agencies like the FDA and EMA.
Which can be long and expensive.
And unpredictable. Plus, managing everything after approval. And all this can get amplified by things like pandemics or geopolitical tensions.
What about ethical considerations?
Crucial. Maintaining ethical standards in R&D, ensuring patient safety, protecting data privacy, following good clinical practices. These are non-negotiables. And any slip-ups carry huge risks.
And ESG expectations. You mentioned their commitment, but is there a risk side too?
Yes. Stakeholders, investors, patients, employees care more and more about ESG. Failing to meet those expectations can damage reputation and trust.
Talent risk too. Finding and keeping the right people.
Absolutely. And managing their external workforce, their suppliers, ensuring partners meet human rights standards, environmental practices. It's all part of that broader responsibility and risk profile.
And product quality itself.
Paramount. Ensuring proper controls in development, manufacturing, complying with all the global regulations to guarantee product quality and patient safety. Any failures here are incredibly serious.
And data privacy seems like a growing concern everywhere.
It is, especially with diverging legal frameworks across different countries. Managing personal information securely is critical and complex.
Okay, that's a sobering list of challenges. Shifting slightly, what about major corporate changes recently?
The biggest one was definitely the spinoff of the Sandoz generics and biosimilars business. That happened October 3rd, 2023.
The final step in becoming that focused medicines company.
Pretty much. And alongside that, they've been active with acquisitions, buying companies like Mariana Oncology and Morphosis.
Signaling where they want to strengthen their pipeline. Oncology seems key.
Clearly, it's about strategically adding assets in those high-growth, innovative areas.
And this focus is reflected in their manufacturing too.
Yes. They're adapting their footprint, moving towards making lower volume, perhaps more specialized, customized medicines. That's meant some site closures since 2021, but also big investments.
In what areas?
Expanding capacity in cell culture, biopharmaceutical manufacturing, and especially radioligand therapy, even bringing some isotope production in-house, which gives them more control.
Interesting. And they're forming alliances too, not just buying companies.
Yeah, strategic alliances are still part of the playbook, focused on those key disease areas they see driving future growth.
We mentioned the FDA and EMA briefly. Those regulatory processes are obviously vital.
Absolutely fundamental. Getting that stamp of approval for safety and efficacy is the gateway to the market in the US and EU, their biggest markets.
And patents. How crucial are they?
Hugely crucial. They protect the investment in R&D, patents cover the products, how they're made, how they're used, but patents can be challenged.
By generic companies.
Exactly, especially in the U.S. with the Hatch-Waxman Act. The threat of losing patent protection and facing generic competition is a constant reality they have to manage.
Okay, let's pivot to the numbers. You mentioned strong growth. Let's get into the specifics from the 2024 report.
Right. So net sales hit USD 50.3 billion. That's up 11% from the previous year in constant currencies.
Pretty solid top-line growth.
Yeah.
And profitability.
Even better, arguably. Core operating income jumped 19% to USD 19.5 billion, and that meant their core margins improved too.
So growing sales and becoming more profitable at the same time. What about returns for shareholders?
The report highlights strong total shareholder returns, or TSR, in recent years, and looking forward, they've put out some pretty ambitious guidance.
What are they projecting?
They expect average annual sales growth of at least 5% through to 2029, and they're targeting a core operating income margin of 40% by 2027.
A 40% margin target is quite something. Where's the growth coming from across their different therapy areas?
Okay, let's break down the 2024 net sales. Cardiovascular, renal, and metabolic was a standout USD 8.6 billion, up a massive 34%.
Wow.
Immunology also very strong, USD 9.3 billion, up 19%. Neuroscience did well too, USD 4.8 billion, up 30%.
Oncology, that's usually their biggest area, right?
It is USD 14.7 billion and still growing nicely at 15%. The only area that dipped was established brands, down 12% to USD 13.0 billion.
Which is kind of expected as products lose exclusivity.
Exactly. Patent cliffs and generic competition hit those older products.
So which specific drugs are really powering this growth? You mentioned a few earlier.
Yeah, the top performers are really driving things. Entresto hit USD 6 billion in sales, up 30%. Cosentix reached USD 5.2 billion, up 14%.
Kisqali.
Kisqali had huge growth, up 46% to USD 3.8 billion. Kesimpta almost doubled, up 89% to USD 1.7 billion.
Incredible growth for Kesimpta.
It is. And Scemblix was even more dramatic, up 177% to USD 1.2 billion. Pluvicto, the radiologan therapy, grew 42% to USD 1.4 billion. And Ladavio, the cholesterol drug, grew 146% to USD 0.3 billion, though it's starting from a lower base.
Those are some really impressive product growth figures. What's behind it all? Just increased demand.
It's largely that, yeah. Strong underlying demand for these key brands. But also, getting approvals for new indications really helps.
Like using a drug for an earlier stage of a disease.
Exactly. They mentioned Kisqali getting approval for early breast cancer, for instance. That opens up a much larger patient population.
Right, that makes a big difference.
Okay,
Let's look at the overall income statement for their continuing operations.
Sure. Gross profit was USD 38.9 billion, up 14%. Operating income saw a really big jump, up 49% to USD 14.5 billion.
And the return on sales reflects that.
It does. Return on net sales improved to 28.9%, up from 21.5% the year before. Now, net income was USD 11.9 billion.
Which is actually down from 2023.
It is, but that's purely because 2023 included a large one-time gain from spinning off Sandoz. The underlying profit from the ongoing business is definitely up.
Got it. Important context. How's the balance sheet looking? Healthy.
It seems solid. They ended 2024 with USD 11.5 billion in cash and cash equivalents. Total assets include significant non-current items like property, plant, equipment, and those crucial intangible assets, patents, brand value.
And liability.
A mix of non-current liabilities like long-term debt and provisions, and current ones like short-term debt and payables. Overall, total equity stood at USD 27.0 billion.
Okay. And cash flow. How much cash is the business actually generating?
A lot. Net cash flow from operating activities was USD 17.6 billion, up 24%. And free cash flow, the cash left after investments, was also up 24% to USD 16.3 billion.
That's a very strong cash generation profile. Now, they use core results quite a bit. Can you quickly explain that again?
Right. Core results are non-GAAP figures. They basically adjust the standard GAAP numbers to exclude certain things like amortization of intangibles, impairment charges, maybe some restructuring costs, or one-off gains losses.
To give a clearer view of ongoing operational performance.
That's the idea. Their core operating income, for example, was that USD 19.5 billion figure we mentioned, up 19%. It smooths out some of the accounting noise.
Okay. And taxes. Any quick note on that?
Yeah, their effective tax rate from continuing operations for 2024 was reported at 12.5%.
All right. Moving on to shareholder value. How are they planning to return some of this success to investors?
Two main ways, typically. Share buybacks and dividends.
What's happening with buybacks?
They have a big one ongoing up to USD 15 billion, started back in July 2023. They'd already bought back quite a few shares under previous programs and this new one by October 2024. Part of it is also to offset dilution from shares issued for employee compensation.
So they're actively reducing the number of shares outstanding.
Yes. They held about 86 million treasury shares at the end of 2024. Buying back shares can support the share price and increase earnings per share.
And dividends, are they committed to paying those?
They state their expectation is to recommend a dividend each year. But importantly, it's subject to shareholder approval at the AGM.
And based on profits in Swiss law.
Exactly. Based on distributable reserves according to Swiss law, and their auditors have to confirm it complies. So it's a regular expectation, but with formal checks and balances.
And does executive pay tie into this shareholder value focus?
It does seem to. Their long-term performance plan, or LTPP for executives, uses relative total shareholder return TSR as a key performance measure.
So how Novartis' stock performs compared to peers directly impacts executive bonuses.
That's right. For the 2022-2024 cycle, the report notes the TSR payout was 130% of target, suggesting they outperformed their peer group on that metric during that period. It definitely aligns incentives.
Okay, good alignment there.
Yeah.
So bringing it all together, what's the assessment looking forward? How does the picture look for Novartis?
Well, management sounds very confident. That chair's letter reiterates the target's at least 5% average annual sales growth to 2029, that 40% core operating margin by 2027.
And that confidence comes from?
From the focus on high-value innovative medicines, the strength they see in the current portfolio, those big growers we discussed, and what's coming through the pipeline.
And they feel the foundations are strong.
Seems so. Those efforts to boost the supply chain, manufacturing, the tech infrastructure, plus the stated ESG commitment, it all provides a base. But
And there are still those risks we talked about.
exactly. It's still the pharmaceutical industry. It's dynamic, it's competitive, managing regulatory hurdles, pricing pressures, technological disruption, competition that remains absolutely critical to actually hitting those ambitious targets.
High potential, but definitely not without challenges.
For sure. Their future growth really seems pinned on the success of those key therapeutic areas, and particularly those advanced technology platforms, the xRNA, the radioligand therapy, the gene and cell therapies. That's where the big bet lies.
Okay, so if we were to summarize the key takeaways from this deep dive into Novartis's 2024.
I'd say it's a story of successful transformation into a focused medicines company. They've shown strong 2024 financial performance, really driven by that strategic shift and growth in their core innovative areas.
Plus a clear commitment to things like innovation culture and ESG.
Right. And definite plans to create shareholder value through buybacks and dividends backed by strong cash flow generation.
It paints a pretty compelling picture, a company with momentum and a clear strategy. But it does make you think.
What's that?
Well, considering those ambitious growth targets they've set and just how fast the whole healthcare landscape is changing, what do you think are the biggest potential hurdles they might really face in the next few years? And maybe more interestingly, how might that specific focus they have on xRNA, RLT, and gene therapy, how might that actually help them navigate those hurdles? Or could it potentially even create new unforeseen challenges for them down the road?
That's a really good question to ponder. The potential versus the risk in those specific high-tech bets.
Something for our listeners to think about. Thanks for joining us for this deep dive.